What's up everybody? In today's lecture, I will teach you the high probability liquidity sweeps. What do I mean by high probability liquidity sweeps? Here you can see that the price swept this high and then it changed the direction and it came down. So it means it took the liquidity here. But then here you can see that the price swept the low, but instead of changing the direction, the price kept going down. Again, here you can see the price swept the low, it changed the direction and went up. Here you can see price swept the swing high, okay, and then it changed the direction. So in this lecture I will explain why this was a high probability liquidity sweep and why this is not a high probability liquidity sweep. So I will discuss all these three examples. This one, okay, the price swept the high and then it came down. Then this one you can see the price swept the swing high and then it came down. Then again this one, the price swept the low and then it went up. So I will explain all these three examples and it will help you understand why these are high probability liquidity sweeps. So in this strategy, we will use the 4-hour time frame and the 15-minute time frame. Right now you are seeing the 4-hour chart and this is the GBP USD chart. I will start from here. Here you can see that the price made a swing high. What is a swing high? An upper candle followed by two lower candles. So this was a swing high. We will mark this, okay, and we will wait for the sweep of this swing high on the 4-hour. And here you can see that the price swept this high and then it came down and closed below it. This is what you have to see on the 4-hour time frame. Now here you can see that here the price also swept the low and then it closed above it. This is another example. And then uh, this example, here you can see the price swept the high and then it closed below it. So in this strategy, the first thing that you have to look for is a sweep of the previous swing high or the sweep of the previous swing low, and then a close above it or a close below it. The price swept the high, but the close was below this line. Here the price swept the low and the close was above it. Same is the case here. Price swept the high, closes below this line. And this is another example. Price swept the low and then close above it. So this is all you have to look for on the 4-hour time frame. Then what you have to do is you have to shift to a smaller time frame, which is the 15-minute. So we will discuss the first example, which is this one. Okay, let me zoom it in. So at this point we were looking for a sweep and a close below it, which we got on the 4-hour. Now we have shifted to 15-minute. So on the 15 minutes, what you have to do is you have to look for the last swing low that was made before sweeping this high. So you can see this is the last swing low that was made before sweeping this high. So we will draw a line here. You can see. So this was the low and it was made before sweeping the high, so we mark this level. Now the next step is we have to wait for a close below this line, and you can see on the 15 minutes price closed below it. So this is your confirmation of a high probability liquidity sweep. What you have to do now, you have to wait for the price to go above this line and then you have to get an entry. Okay, your stop loss will be above here, and usually my target is 2.4 RR, but it depends. Sometimes I take profits earlier. You can see the price came down after the confirmation. The price went up, touched this line, and then it came down. So you can see that from this point you got almost 44 pips. Okay, the price has gone down even more, but you can see this is already a big enough target. So this was the first example that we just discussed. Now we will discuss this one. You can see the price swept the low and then it closed above it. This is the first condition. Now we have to shift to smaller time frame, which is 15-minute. So let's see what has happened on the 15-minute time frame. You can see this was the low, it got swept. Okay, now what we have to do is we have to wait for a close above it, and here you can see this was the last swing high. We have to find the last swing high that was made before sweeping the low, and this is the last swing high that was made before sweeping this previous swing low. Now the price has closed above it, so this is where we will enter into our longs. Stop loss will be below here, below this swing low, and you can see that again we got a good enough target. Let's see how much pips we got here. This is even more. This is 46 pips. Now I will discuss the third example. Let me shift to 4R. So these are the two examples. Now we will discuss this one. Again, you can see the price swept the high. Okay, it closed below it. So we will shift to smaller time frame. Let me shift to 15 minute. Let's discuss this one now. So this is the third example. The price swept the previous swing high, and you can see this is the last swing low that was made before sweeping the high. So we will draw a line here, and you can see that the price swept this low. Now this is where we will get our entry. This will be our entry point. Our stop loss will be above this swing high, and you can see that again we got a good enough target. This time even bigger. So even if you close here, you can see you got around 50 pips. And then you can see the price has gone down even more. Now in this case the price swept this low on the 4 hour. It even closed above it, but what happened was that the price didn't go above the last swing high that was made before sweeping the low. So this time this sweep didn't give us an entry, so that's why this is not a high probability liquidity sweep. In the three examples you saw that the price was closed below the last swing low or the last swing high before sweeping the highs or the lows, and in this case the price didn't close above the swing high that was made before sweeping this low. So this is how you would know if a particular sweep is high probability liquidity sweep or if it's a low probability liquidity sweep. If you have any questions, you can ask me. This is pretty much all about the liquidity sweeps. I hope it makes sense. Thank you.